cover a lot of things. Confirm you can see my screen. You can show me through reactions if you can see my screen. Thank you for that feedback. So whenever we are dealing with VAT, what's critical, what's important in VAT? So VAT, there are two most important things. So it's either output VAT or it's input VAT. So there is either input VAT, so some of that I've included here in my mind map, in my cheat codes, isn't it? So what's crucial? So the master formula for VAT, it's your VAT payable or your refundable, which is your output tax plus your deemed output tax plus imported services, VAT plus VAT adjustment. Can you see the master formula there? That's your, then minus input tax, which is your allowable credit, your input minus allowable adjustment credit minus VAT withholding. It's just the master formula. But which means it gives me two things. There is output VAT, then there is what? Input. These are the two things I should focus on. Input VAT first. Let's deal with these two. So I'm just summarizing because we have others who are writing next week. So I'll be straightforward, team. So when it comes to output VAT, so the question, when does output VAT arise? That's the question you should ask yourself. When does output VAT arise? So when we talk about output VAT, in summary, this should come into your mind, team. When does a VAT liability arise? So tikuti ndepapi patinofanwa kubhadhara ndizvo or to remit to ZIMRA, because whenever it comes to VAT, there is a part we are collecting money on behalf of ZIMRA. So when we charge our products, you shall observe, even if you get in a supermarket, the price you are charged, if you are charged $20, ukatarisa your invoice, panenge pakanzi subtotal, then ozoti VAT. Then, so in other words, output. If we go to the tax ledge, let's appreciate from the definition of the tax ledge. And so if we go to our section 6, pano arise input VAT. So it's our tax ledge, to be specific, our VAT ledge. And your volume, son, isn't it? So if you go there, I want to show you something, Tim. Very quickly. So according to this one, section 6, output VAT yako, that's where the issue starts. So they're saying, subject to this act, they shall be charged, levied, collected. They shall be charged, collected for the benefit of the consolidated revenue fund, tax at a such rate. So you are collecting on behalf of. That's why if you do your IAA 16, what cost, what excluding amount VAT which are refundable. So what they are simply saying here, you are collecting on behalf of ZIMRA. So to put your price is $10. Then the ZIMRA or the consolidated revenue fund, they are simply saying, say plus 15.5% on your $10. Then the excess, which is, if it's 15.5, it's about 1.5 to make it 11.5. So if they are selling at 11.5, but the 1.5 is being collected on behalf of ZIMRA. Yep. So the first question is, when does output VAT arise? That's the first question you have to ask yourself. So, and when it arises, it creates a liability. Isn't it? Then the question, it arises because of what? We want to first deal with the output, isn't it? So it arises because, number one, there is a supply by any registered operator of goods or services supplied by him on or after the fixed date, but there is in the course or furtherance of any trade carried on by him. Please, in the course or furtherance of any trade carried by him. So it's not only arising. So the next question, before you proceed, you need to ask yourself, what's trade? Hello? So the question is, what's trade? You need to ask yourself, what's trade? Because they are saying there is trade. So the question is, what's trade? So trade again is defined. If we go to our section 2, they define trade. Can someone quickly open their VAT Act, please, on the definition of trade? I want to show you something there. So they define what's trade. So trade is defined. So the Act actually defines what's trade. Faster. I just want the definition of what is trade. Definition of what is trade. Don't worry, mind me notes. So the question, those who have just joined, the question is, when should you remit output VAT? So the question, or when does a VAT liability arise? That's the first question you have to ask yourself. So then section 6, so VAT, according to the VAT Act, it shall be levied and collected. So you are levying and collecting for the benefit of the Consolidated Revenue Fund at such a rate as may be fixed by the Charging Act. So that's why it's a liability. So which is your section 6. So your section 6.1, when does output VAT arise? So, or when does a liability arise? So it's the supply by any registered operator, supplied on or after the fixed date, but what in the furtherance of trade. I'd requested if someone can quickly open section definition of trade. I just want the definition of trade. Anyone?
In the case of any registered operator, other than a local authority, any trade or activity which is carried on continuously or regularly by any person in Zimbabwe or partly in Zimbabwe, and in the course or furtherance of which goods or services are supplied.
Thank you, FNH. It's enough. Okay. It's enough. So, Tim, did you pick that it's in Zimbabwe or partly in Zimbabwe? Meaning to say, within the definition of trade, it excludes if I sell goods into my own, even independent, if I'm supplying goods to my independent branch in another country. So trade removes the sale of goods. If I'm supplying goods to a branch, my branch in another country, then if you go through FNH, there is a where they explain about an independent branch. Tim, it's another key important thing, Chiripo Papa. They talk about an independent branch. Confirm? Can you see that? FNH, can you see independent branch?
I'm trying to look through.
All right. We could trade. So, Tim, so did you see what's trade? So trade varikuti sell in Zimbabwe, supply in Zimbabwe, or partly in Zimbabwe. Then the question is, what if we have a branch in South Africa? We have a branch. We are supplying goods to our branch, which is in another country, not in Zimbabwe. So it's not included. Please, that one, it's not included in the definition of trade. But then, if you go to section 2, they go further to explain that is it an independent branch? Is it an independent branch? When they talk about, there are certain things which you should prove that this branch is an independent branch. FNH, did you manage to get that?
Yes, the supply outside Zimbabwe of goods or services by any concern from any branch or main business thereof, where such branch or main business is permanently located at premises outside Zimbabwe if the branch or main business can be separately identified.
So they are now bringing in circumstances when you can say that's an independent branch. So number one, they are saying, those factors, FNH, proceed.
A branch or a main business can be separately identified.
An independent that's number
system.
one. Then it has got an independent system of accounting team. If I prove that, then it triggers FNH keep on opening the standard. And then the moment I prove that it's an independent branch because it has got a separate system, then it has got independent accounting system. If I can prove that, then it now triggers, if that's applied to an independent branch, it now triggers section 7.8. Section 7, quickly 7.8 of deemed sales. What does it say? FNH? Because section 7.8.
So it says, for the purposes of this act, where any registered operator is carrying on a trade in Zimbabwe, transfers goods or provides any service to or for the purposes of his branch or main business, in respect of which paragraph 2 of the proviso to the definition of trade in section 2 are applicable, the registered operator shall be deemed to supply such goods or services in the course or furtherance of his trade.
Is it making sense? Do you see how it's brought now? So as we deal with the section 6 team, section 6, what it stands for, it deals with only goods supplied in the furtherance of trade. So if it's in the furtherance of trade, it should be within Zimbabwe or partly in Zimbabwe. And if we supply to our independent branch in another country, then you have to go back to the definition of trade. You need to go to the definition of is it an independent branch? If I prove it's an independent branch, then it is deemed to be a supply by para 7.8. But let's now do, so the question, my question is, when does a VAT liability arise? So the first thing, Tim, you need to understand, is there a supply of goods, which is your section 6? So the first thing, is it a supply of goods or services? Yep, which is your 6.1a. Is it a supply of goods and services? That's the first thing, which is number one. Supply by any registered of goods or services. That's number one. On or after the fixed date. Then number two, which is your B. Is it importation of any goods into Zimbabwe by any person? Then number three, which is your C. Any supply of any imported service by any person on or after the fixed date. Then number D, is it a supply, goods and services sold through an auctioneer? Goods or services sold through an auctioneer. So when does VAT liability arises? Remember, Tim, I'm still dealing with the master formula here for VAT. So it's VAT payable or refundable. So the output tax side, that's the one I'm dealing with first, isn't it? What makes up the output tax or the liability? So is there a supply, which is your section 6.1a, of goods or services? Number two, is it imported goods, which is your section 1b? Then is it imported services, which is your section 6.1c? Is it goods sold through an auctioneer, which is your section 6.1d? Then after I identify this team, so there is the supply. Then if it does not meet the supply, it can be a deemed supply, which is your section 7. Don't forget, when does VAT arise? Then it can also arise from output tax adjustment in your section 17. So the question, please, when does VAT liability arise? Then the second question, at what rate? It's arising at what rate? So the moment at what rate, we have got three rates. We have got zero rated, we have exempt. So zero rated, that's your section 10. Then we've got exempt, which is your section 11. Then there is a standard rated, A standard rated haina payakadefinwa in the act team. So, but zero rated, exempt, we have section 10 for zero rated, section 11 for standard rated. So if I go to those two sections, section 10, don't my zero rated. If I go to section 11, my exempt supplies, anything chisiri within section 10 and section 11, automatically it becomes a standard rated. Hello? Are you following? You can show me through reactions. If you have got a question, please feel free to raise your hand. So if it's not a zero rated, if it's not an exempt according to section 11, zero rated section 10, automatically it becomes a standard rated. Every day, it becomes a standard rated. So the first question, when does, so it's your even solution yako team, it would want to examine, when does a VAT liability arise? Pane resupply of goods, pane imported goods, pane imported services, goods sold through an auctioneer, which is your section 6. Is it a deemed, which is your section 7? Is it an output tax adjustment, your section 17? That's the first question. Then the next question is at what rate? So zero rated section 10, exempt section 11. If it does not meet those two, automatically it becomes a standard rated. Then the next thing, what is the time of supply? Duto build a solution yako. So your time of supply, you go to your section 8. Yakuti the area of invoice or payment. Then we have got certain goods and not specific time of supply. Because on section 82, section 83. Then the value of supply. On the value of supply, that's my section 9, where you normally it's your consideration less VAT. Then in other circumstances, if there is a connected person or it's an imported service, we talk about the open market value. Every day, let's proceed. So that's the first question you have to ask yourself. Is there? Then the other side, the other leg, it's input. So the first it's output. So your output arises from your section 6. Your output arises from your section 7. Your output arises from section 13. Your section 13, that's your output, isn't it? Your section 17. Take those. Then the next key thing, let's deal with input. So input is, as long as you're a registered operator. So when do you claim input VAT? So there are instances calculate team. So input VAT, usually it's your section 15 and your section 16, isn't it? But mainly, I want you to start from your section 16. So when does a VAT input arise? So your thought process should be like this. When do we claim VAT, which is your section 15 and section 16? So the first question is, were we charged? Were we charged? So to answer the question, were we charged, number one, there are three things which you should look out for. The registration status of supplier. So the exam, they might tell you in advance, could we buy all our products from registered suppliers? Or supplier X is a category A, category B, category C, or category T registered operator. So that answers the question. The question, were we charged? So number one, the registration status of the supplier. Then number two, to answer the question, were we charged? That supply must be a standard rated, because not gonna kutenga, but to someone and tengesera an exempt supply. Then number three, supplier amita here or your relevant section 6 and section 7, which is it a supply of goods or services? Is it imported goods, etc.? So that's the first question. When do we claim? Were we charged? So what should we focus on where we charge? The registration status of the supplier. Supplier must be standard rated. The supplier is met all relevant section 6, isn't it? Then number two, and under claim up. These are steps to claim. So the first, where we charge. Then the follow-up question on where we charge is, do we want to use the supply to make taxable supplies. Meaning to say, ndogona kutenga, but for my own personal consumption. Tim, if we go back to the definition, who is supposed to be claimed? It's only a registered who is making taxable supplies. That's why if I buy goods, later I use those goods for my own personal consumption, not for the business team. Those goods, zimura inoti tidzosero VAT yedu yawakamboclaima. Hello, is it making sense? So the question is, to answer the question, were we charged? Were we charged? So were we charged? Don't check tanga registration status of supplier. Next question, do we want to use the goods to make my taxable supplies? That's how you build your solution team. If I want to use the goods to make taxable supplies, then do it up aside. Then still on section 16, meter where we charged. Do you want to use the goods to make taxable supplies? But section 16.2, pana not ma prohibited deductions. So pane is this pane supply is prohibited from claiming deduction. No patino bata wana entertainment etc. Then we also deal with input tax adjustment in terms of our section 17. Hello, team. Did we get the mind map in simple terms? The thought process now. The two legs VAT input. So on input, on output, the first question is when does the liability arise? Isn't it? Then liability arise. Section 6 is triggered. Supply in the furtherance of trade. Supply in the furtherance of trade, isn't it? The definition, section 6. Then what was supplied? Is it goods or services? Is it imported goods? Is it imported services? Is it goods sold through an auction? Then the next question is at what rate? The rate now, that's when we said you should consider, is it exempt, which is your section 11? Is it zero rated, which is your section 10? Then if it does not meet section 10 and section 11, it automatically becomes a standard rated. Then what is the time of supply, which is your section 8? No, to build a solution. Then what is the value of supply? I go to my section 9. What to pay the solution? So examine when you want to prove it's an output VAT, do those things. When does the liability arise? So either channel proof imported goods, imported service, it's supply of goods or services, or it's a goods sold through an auctioneer, or it's a deemed in terms of section 7, or it's an output tax adjustment in terms of section 17. That's when does a liability arise. The next thing chawakupa examine, wakumti at what rate, wakumprovira, why are you saying it is standard rated, zero rated, exempted? Then next thing, time of supply, which is my section G8. Then value of supply, which is my consideration less VAT in terms of section 9. Then we go to the other leg, the input, because Panama instance, the VAT payable or refundable. So you need to have the better understanding of this concept. Then you are now taking again your thought process. The first question, when do I claim? So for me to answer the question, when do I claim? Section 15 and 16, but mainly section 16. So section 16 starts where we charge. So to answer the question where we charge, I focus on the registration status of the supplier. Then the supply must be standard rated. What can it exempt? Then supply is met all relevant section 6 or 7 requirements. Then next question, do you want to use the goods? So it's not only where we charge. We might have been charged, but we've bought something for our own consumption. We can't claim. But do you want to use the supply to make taxable supplies? Then if my answer is yes, I tick auto build your solution. Then the next thing is the supply prohibited from claiming a deduction, which is your section 16.3, is entertainment, etc. Then I adjust also for input tax adjustment. That's the first thing. So in summary, your VAT formula. So within this cheat note, that's what I was now dealing, which is my master map, isn't it? Is there a supply, which is my section 2, dealing with them, you only end up section 6. So identify goods or services. Is
You're on mute.
Mapezi round in zope kutichi. The mute kasek. What happened? Mapezi round in zope kutichi. Someone just tuned. Donald and Dinere. Confirm when I started using the cheat notes you were following.
Yeah, just Pamango display
The cheat note.
This yes.
All right. So the mastermind map here, is there a supply, please, which is your section 2. Why? Section 2, that's where they define supply. That's where they define output. Then, is the supply a registered operator? That's the next question, which is my section 2 in section 23, isn't it? Is the supply in cost of furtherance of trade, which is defined in section 2. Then section 6, in the furtherance of trade, proof. So trade must be regular, continuous, for consideration, whether or not for profit. So that's why employee services are excluded. Is it deemed supply? Section 7. Then classify your supply. Is it standard rated? So it's standard rated unless, that's what I was explaining, it's your section 10 or your section 11, isn't it? Determine the time of supply, which is my section 8. Determine value. So your solution should follow this. Is it making sense to you? Then compute your output text, your output in Engapera. That's the mind map I was explaining. Then when I should claim where we charged, which is my section 15, 16, 20. Then are there an adjustment, which is your section 17, 18, 21. Then imported goods, etc. So those other issues should be covered, or they should flow through the same strategy process, isn't it? So if you see here the general principle, which is your section 6.1 what? A. Then if you go to 2026, where the amount is VAT exclusive, VAT equals consideration times 15.5. Where the amount is VAT inclusive, we use the formula 15.5 over 115. When it's zero rated, supplies are multiplied by 0, but they still permit input tax. Another thing, Tim, these days your questions are not going to advise. So, can someone register as exempted or zero rated? So the best answer, Tim, if you are a zero rated, you are taxed at 0%, but you can claim input VAT. But the moment you are an exempt, you don't pay anything, but you can't claim input tax. Yep. Let's mute our mics. Let's mute our mics. Let's mute our mics, isn't it? So these are the specific VAT sections. And I think I was summarizing them, Tim, in detail in this mind map. But because of time, I can now go through each and every, or let me scroll down. The important VAT sections. So that's what I was recording here. What does each section deal with? Section 6.1a, 6.1b, section 6.1c in detail. But this one, then disposal of etc. So I was proving. So then the key definitions again for VAT are important. But in for the purpose of exams, Tim, what's important, what's crucial is the mind map I've discussed with you. So any questions on the VAT thought process? No pandiri kuda. Ndoda kubata akati wandei. Ndoda kubata akati wandei. Any questions on the thought process? On the thought process? Hello? Any questions on the thought process? All right. So I think people are happy. So these cheat notes, they are structurally detailed. They are detailed with everything. And which sections, specific sections. Then how about if it's VAT for leases? Isn't it? there are specific issues. So like if it's for leases and property, so it can be commercial property rental. So general taxable if supplied by registered operator, please. So confused accommodation etc. It depends who is providing. If it's a registered operator, it's generally taxable. But if not, no. So what students must watch out for: input tax claimable by tenant if used for taxable supplies and invoice out, isn't it? Then if it's residential or rental, often exempt where long-term residential accommodation, no output input tax is blocked or apportioned, isn't it? Then short-term accommodation or commercial may be taxable depending on the definition and period. Then etc. So there are many things, and I also covered VAT for employment fringe benefit. For example, if I have a company car, it's taxable benefit under income tax section 81F, isn't it? So VAT output adjustment may arise if the employer claimed or was entitled to input tax adjustment and the benefit is taxable. Then input on passenger motor vehicle may be denied under section what? 2, isn't it? Then fuel for personal, it's a taxable benefit to employee, but VAT output, so private use adjustment may arise. Input on fuel may be claimable for tax trade, but adjusted for private use. But I don't want to dwell much on this one, but you can see, confirm you can see that. Confirm you can see that. I just want to deal with the other sections. For the income tax, we covered it in detail. So the other thing I want to cover today, let me open. So questions on VAT before I proceed. The thought process, there's nothing more you can do besides Randango Kudze Baba. Then the other important thing is CGT. How do I deal with CGT? So mostly the examiner anogona kukut team, and most students they don't normally pick that. You know the in tax implications. The moment they say tax implications, your answer should not be limited to. If they say tax implications, your solution should not be limited to income tax. So it's your income tax, it's your VAT, it's your CGT. And if there are no CGT implications, please clarify that there are no CGT implications, isn't it? Clarify that there are no CGT I don't know zvakuda kuitwa nenetwork yakuda kuita mashura haisi kuda kuti vanhu vadzidze. Then when it comes to CGT team, so the question, when does CGT arise? CGT team, the basic, yes, CGT, from the definition, CGT takes on what we call specified asset. What constitutes specified asset? Number one, on specified asset, let's accept others in the lobby. Specified asset, we have got immovable assets, then marketable securities. Then once you determine the most critical thing, team, on CGT is this formula. We start with gross capital amount. We less your recoupment. You less your exemption. So your recoupment is from your income tax. So the reason why we deduct the recoupment, Zimra can't tax you twice on the same amount. So we don't take Then there is your when it comes to your deductions, that's your section 11 of the CGT. If you go to your section 11 of CGT, what should be allowable as a deduction. So number one, it's your cost. Then plus there is the issue of inflation allowances. If there were any improvements, additions or alterations, then we deduct the cost. So the other question, just before this session, someone say, if we are in city, let's say we have a land which is held for capital appreciation or which is fairly valued, isn't it? So which amount should I include as my carrying amount? So the fair value of that asset becomes your carrying amount for your IAS 12. Then what is your tax base? If I go to my IAS 12 para 7, define what is a tax base, amounts which are allowable as a deduction in future. So if I go to my CGT, I go to my section 11, it clearly states what should be allowable as a deduction. So if I want to determine my tax base in CGT for an asset which is appreciating, it's my cost plus improvements plus inflation allowance. That's my tax base. Happy days? It becomes my tax base. The key thing. So we less deductions, which is your cost, your inflation allowance. Then the only thing I want to deal with here, team, how do we deal with my reliefs? So you get your potential gain. When does a relief arise? So relief, it can arise in many circumstances. So I want to show you when relief can arise. So deductions. So number one, a relief can arise if there is a damage or destruction of a specified asset. So if there is a damage or destruction of a specified asset, create a deemed sale. Then let's say you are compensated by the insurance. And I want to use that money received from the insurance to construct another or a similar asset. If I want to construct a similar a relief. So a quick question, team. ABC constructed a finished goods warehouse. There is a finished goods warehouse, team. Don't forget, if we go to our income tax, to be specific in the income tax, if we go to our fourth schedule, they define my assets. One of the issues which could normally confuse students is distinguishing between an industrial building and a commercial building. So here, if they are saying this is a finished goods warehouse, a warehouse can be a commercial building if we are using it to store my goods atatenga atori finished kudara. But if we are using the warehouse to store my goods which we have manufactured, it's an industrial building. Why is it important to distinguish between the two? An industrial building, if it's constructed, it attracts SIA at 25%. If it's purchased industrial building or inherited, it attracts wear and tear at 5%. As opposed to a commercial building. A commercial building doesn't attract SIA. It only attracts 2.5% wear and tear. You happy? Is it making sense to you? You can show me through reactions. So it only attracts wear and tear. So in this circumstance, team, even if vakakutrigger IAS 12, ngatisatange kufoira nekuda kwekungotadza kudistinguisha between what's an industrial building, what's a commercial building. Then distinguishing between what's a and what's not a passenger motor vehicle. That's another area. Inogona kuita put off my exam. So here, if it's a constructed, a finished goods warehouse, So the word finished goods, it comes from manufacturing, where when we are purchasing ready-made products and the finished goods, hello, in general terms, team kana chinopurchasa zvakatoproducwa kudhara anonzi finished goods here. So the word finished goods, it comes from inongonzi inventory. So the word finished goods inobvira kwekuti tine raw materials, work in progress, finished goods from your basic manufacturing account. And so let's take it together. So in this circumstance, what it simply means here, Trikuti Isusu, it's a finished goods. So before I think about CGT team, this is an industrial building. Number one, which means it was constructed, which means it attracts here at 25%. So if I go to my universal formula panel, yes, CGT, pandichada ku determine my capital allowances, that's here. Pandichada ku determine recoupment, let me calculate it based on the principles of an industrial building which was attracting here, isn't it? But avakudze izvozvo vanoasuma kuti une knowledge yacho, vatoasuma kuti wakadzidza wakapabata. Then the company was paid 150,000 by its insurer and used 130. Get this right, team. Where does a relief come from? Tabadaro 150, but I'm using the 130 to construct or to replace the building. Or constructing the building, the 1/3 I'm using to construct another building. Can I have a relief? Let it a deemed gross capital amount, but I'm utilizing to reconstruct. So Ndrungo requester Zimra, do not take me on this amount yet, because I'm using it to reconstruct my building. Man, this is a regional relief in simple terms. This is work. Hello? You can show me through reactions, please. Let's just show through reactions. If you have good questions, feel free to ask. Feel free to ask Tim. So, in this circumstance, so the trick here, we sold it for 125,000. So, number one, I need to determine the recoupment in terms of my income tax. Number two, I need to determine the capital allowances in terms of the Income Tax Act, because recoupment is deducted from the gross capital amount. I need to determine the capital allowances because they are deducted from my deductions again. So if I go here, if you see here, they started with the gross capital amount of 150. But the question, how did they calculate this recoupment of 125? The simple terms, team, dear Kuti Susu, this asking how much, isn't it? Constructed finished for 125. So 125 was my original cost here. Then what was the date? June 2014. And when did it caught fire? In 2018, please. So which means I claimed this year for 2014, 2015, 2016, 2017. So ndaka claim at the whole 125, confirm. So panapa, in other words, in dina zero. I have got zero in terms of the TB, tax base, or the ITV, it is zero. So what it means, if this was now damaged, but I was compensated, I have to calculate recoupment. There is a deemed cell here. So recoupment is limited to capital. The 150 we received is the potential recoupment. But according to the Act, they say the recoupment is limited to capital allowances previously granted, which is you had claimed the whole 125. That's why my recoupment is 125 there. Happy day. Then less deductions. The first deduction is my cost, which is 125, which is your section 11 of the CGT. Less capital allowances. We had claimed all the capital allowances. Why? Because we can't claim of Income Tax Act. You can't claim them further. CGT. Then inflation allowance. For inflation allowance, team, unlike here, we claim inflation allowance for each year. For each year, whether the year of disposal or not year of disposal. So the way I count for inflation allowance, it's 14, 15, 16, 17, 18. That's where they are getting the 5 years. And inflation allowance is fixed at 2.5%. So it's your 125,000 times 2.5% times 5 years, which is your 15,625. So we get our total here, it will remain 15,625. We get our capital gain, which is 9,375. So usually it's known as the potential capital gain. But the 9,375 is for the whole 150,000. But I'm now going to Zimura to say, but I utilized the 1/3 of the 150 to construct a similar property. So can you give me a relief? So I'm saying 1/3 of 150, which I have not used for my own benefit, times the 9,375. This amount, I am not going to benefit from it because Zosera to reconstruct the building. So give me a relief. So you now say 9,375 minus 8,125. This becomes your recoupment. Then I should be taxed 20% of this amount. Any questions, team? Any questions? Before I proceed, do you see what a relief is? Hello?
Hi, say Chris.
Yes.
Sorry, could you please come again on inflation? Did you say like we're not supposed to include the year of disposal or
No, inflation we include both, but this year, we don't include. For capital allowance, we don't include we don't calculate them in the year of disposal. Happy, Melan?
Okay, so confirming in this regards, it's because it was 1 Jan 2019. That's why it's not counted as a full year.
Again, kanatiri ku ma inflation allowance or ma capital allowances. Ndizoka atikaunde tiche, we don't consider kuti times 6 months. No, it's only the year. See how you claim it's not apportioned. Capital allowances are not apportioned. Melan. So that's why I'm going to go to 14, 15, 16, 17. See. But for inflation, that's got 14, 15, 16, 17, 18. I mean, that shall make sense. Is it making sense now? Hello? So that's the difference. So you can't claim capital allowances in the year an asset is disposed or distracted. But you can claim, let's accept those in the lobby team, but you can claim inflation for each year. And we don't apportion like what we do with the depreciation, isn't it? All right. I can see another hand. Sign it. Prudence.
Yes, I wanted to confirm if we are using wear and tear, is it the same case that we also do not apportion for the
Yes, we don't apportion. We don't apportion. Wear and tear, and we don't apportion.
All right, thank you.
Yeah, so please let's not make that mistake, isn't it? All right. Then let me take it further too. So if they are related party transfers, team, mostly for related party transfers, this triggers your IFRS 3, isn't it? If assets are being transferred to the owners, you know, as part of your consideration, if there is assets which are being transferred to the owners, and those assets which are being transferred to the former owners, you need to understand, if we are transferring assets to the company, those assets are transferred at their carrying amount. The reason we want to escape CGT or to escape income tax, but if they are being transferred to the former owners, that's when we say we transfer them at fair value. Yesterday session, on Tuesday session, that's what we covered, the team. So when we are transferring, so it's being taken, borrowed from the tax issue. Then another critical thing, I want to go still on relief. The last question on relief. Let's say there is a higher purchase. So what's a higher purchase? A higher purchase, I bought an asset, but I'm going to pay for that asset in installments. I'm going to pay in installments, like maybe in 3 years' time. So the question is, Zimra, remember your principle, its income is when it's received or when it's accrued, isn't it? But so I can seek for a relief. So in normally, if you understand the concept with a teenage formula each team, if you understand the principle. So I want to explain and simplify it in simple terms here. HYT bought a factory building, another thing. Factory building, before that focus on CGT. This is an industrial building. Do you agree with me? But since it's an industrial building, it was not constructed. That's the first thing you should think about. It's not constructed. So if it's not constructed, no SIA. Do you agree with me? Therefore, it attracts what? 5%? Where and what? NDT. Are you following, Tim? Is it making sense? So this thought process, and this could have a divorce between the way your thought process, because your thought process should be the same. So it's an industrial building, but it's not constructed. So if it's not constructed, no SIA, it's attract way and T 5%. Which affect the answer yako. Because I do mubude mchiti tarova, most chekero. Then it on 1 December 2015 for 400. So in terms of the principal team, and they had been using it since that date. On 2 March 2018, the company found a buyer willing to purchase the building for 750. So before I deal with this from your CGT, a better understanding of this from my Income Tax Act principle. So in terms of the income tax principle team, it attracted 5% of the original cost 400,000, isn't it? How much is it per year? How much is it? 5% of 400,000 per year, which is 4010. Then it's 20. Confirm it's 20,000 year one, which is 2015. Then another 20,000 team in 2016. Then another 20,000 in 2017. But no where NDTA is claimed in 2018 because it's year of disposal. So in other words, my total, I have claimed total capital allowances of 60,000, which should be adjusted back Canada in terms of when I say less my deductions, the capital allowance should be deducted from the cost price, because you can't claim them twice. You claim them in income tax, you can't claim them again in CGT. Then number two, I need to determine recoupment. Recoupment is not issue. So how much did we sell the asset for? 750,000. 750,000, team, it's my potential recoupment, isn't it? But according to the Act, they say recoupment is limited to capital allowances previously granted. So my capital allowance becomes 60,000. I want to choose and observer team. So the determiner recoupment, the determiner the capital allowances before. So kune mamwe marks are not gonna kuluza because you were not aware with the basic principles of income tax. So it all working ish. Unengwa to lose kana 7 marks. Zaenda usati watombo tanga zve CGT zvacho. Happy days. Hello. You can show me through reactions, team. So I don't want you to lose marks before you. Yes, it's fine. I can see reaction. So sometimes, team, just understanding. So CGT, vanokupa kuti zvawaka tax off income tax, we can't tax you twice. Zvawaka claim from the income tax, you can't claim it again. Saka, you need to determine your recoupment. You need to determine your capital allowances granted in the other act. Then another key thing, tochiti sus ndakupfurira. Then how are we going to pay? The buyer is going to pay 50% of the sale price. So do you agree with me? 50% of 750 is 375,000. That's the 50%. So it's being paid in the year of sale. Then the other 375,000, do you agree each badar say the remainder over 2 years? So in other words, the other to receive 187,500. Let's say in year 2, we receive the other 187,500 in year 3. So Zimra, when it comes, you don't go cover the whole CGT on 750,000. But your argument, you are seeking for a relief that I have not received all the money at once. Do we receive in installments? Therefore, can you kindly tax me on the 375 first year? Then you tax me on the 187,500 in year 2 and the other 187,500 in year 3. Man, this is a very basic principle here, relief team. That's the basic principle here, relief. So, it's not possible for you to tax me the whole amount in 1 year. So, but how do you calculate it? Don't you formula church and run chitikan one? This is the principle. Wakwita say, when I this is your gross capital amount, your 750,000. Then you less recoupment. Confirm we all now appreciate and I wanna say the 60,000 are going the recoupment. Do you agree with me? How we got the 60,000? All right. Then another important thing, I less my deductions. There is the cost, which is in terms of section 11. Then let's come to allowances, the 60 for the 3 years. But for inflation allowances, remember that for inflation, the not 15, 16, 17, 18. That's why we have 4 years here. I remember there's someone who once asked the question, if I can remember the name, Melan. Can you see? I've answered that question again. Is it now fine, Melan? You can show through reaction or you can unmute.
Yes, thank you.
It's now making sense. So inflation allowance is for each year, but for wear and tear, it's we don't include the year of disposal. So questions on the principle of relief, team? Questions on the principle of relief? That's how the relief, we come up with the relief team, isn't it? Yes, I can see someone, there is a hand.
I said maybe I missed the part where you concluded on the relief for delayed payments there.
All right, let's proceed now. So let me finalize it. So confirm you now if the 400, are we all fine with it? Then we deduct 60 because we've already claimed it in your income tax. Then we adjust for the inflation allowance. Then there is selling cost etc which was incurred. We get 455. Then this is my potential recoupment. Let me now answer your question now. So this 235, Zimra wants to tax me the whole 235 in 1 year, in year 1. But you are now seeking for a relief now. You are now saying, okay, in year 1, I've only received the 375 of the 750 times the 235. Can you only tax me on the 117,500? Is it making sense now? I begs, I can't interpret. Is it making sense now? Yeah. So you are now saying, oh, can you only tax me on the 370, something equivalent to the 375 of the 750. So we tax you on this 117,500, the 20%. Then in the second year, I'm going to receive the other 187,500, isn't it? The other 187 is still missing. So can you give me relief on the 187, which is not yet received, of the 750, which is 58,750? Then in the third year, you have received all the amount. We now tax you on this amount. That's the principle of relief. Other questions? So that's the trick with the reliefs. So most students, the party and careful. They go understand that team, when they give me an asset, when they give me a building, I should use the principle equal income tax fourth schedule. They define what's a commercial building. They define what's an industrial building. Yes, Nele?
I want to understand where the selling total gain is coming from at 75. Selling total gain. That one under inflation.
Under inflation.
Yes.
All right. I think it was a selling cost. Yeah. It's a selling cost. I don't think you interpret. Selling expense is 10% of gross proceeds. I say nearly. It was selling cost.
Okay.
All right. Any other questions on the relief team? Aitakuzwa?
Chris, young question is for relief ka 60 uyo takuita kunge tamulesa ka 2. I don't know what I missed there. Kuti 750.
It's not twice. All right. So remember, we've got the income side, the gross capital. So in the income tax, if you dispose in assets, there is a recoupment. It's a special inclusion in income. So in terms of the income tax, takes out to get a recoupment. That's the first 60,000. Then recoupment, when we are calculating it, there is a principle where they say it should be limited to capital allowances previously granted. So uniati not the potential recoupment, which is your 750. But the 750 top at it's limited to capital allowances previously granted. So our recoupment there by 60,000. Which was equivalent to capital allowances previously granted. So the 60 gross capital is the recoupment. Then on the other side, on deduction, it's the capital allowance.
Thank you.
All right, Prudence.
Can you please come again on the third process behind 2019?
On the
third process behind 2019.
All right. So or chekutanga ndiende kuchivanhu chedu ndizvoka. Chekutanga tati receive 750 ndizvo tatengesa for 750 but hatina kureceive the whole 750. Munhu achatibhadhara achandipa half 375 mugore rekutanga, which is 2018, ondipa the other half of the remainder, which is 187,500 in year 2, which is 2019. Confirm Prudence. Ozondipa imwe 187,500 mu year 3 ndizvoka. So tirikuti isusu chichemo chedu kuzimura tirikuti iyi ndikufanirwa kubhadhara CGT on the 235 ndapedza the normal calculation yangu ndizvo. Banda kunoita chichemo chekuti pa 235 uyu, yes, it's 20% of 235, but pamari yangu 235 iyi dango receive 375 of the 750. So apa patru calculate apa Prudence, 375, it's not the amount received. Ndoda kusika relief on the amount that I have not yet received. Ukubabata. So about 375 over 750, it's the 375 not yet received. They are looking the relief. But 375 of the 750 I said they are receive of 235. Saka take say on 117,500. Babati ke rough. Prudence pekutanga.
Yes.
Then down 2019. And it wakakumbira relief here 117,500 and calculated, which was the half. So ndo dzikisa ya wakakumbira relief ndianda kuti ndo gain ndo CGT yako kandi une 117,500 ndo yatakuda kuchikutexa ya wakakumbira relief, but takuchiti still ndine imwe 187,500 of the total amount 750 yandicha receive mu year 3, saka ndipewo relief on that. Ameva make sense. Or in other words, ukada kuita it differently, urushkoti wewe chindipayo relief on 187,500 of the 375 isati yabhadharwa ndizvoka times yasati yabhadharwa i117,500. I can go it this way. Make sense. But iya iburitse manje I interpreted the correct thing. The correct thing urikusika relief kuti on total amount yangu 750 here Dine 187 of that 750 and sanda receive. Prudent. Saka iyo imbomira kunditexa. Are we together now?
Yes, thank you.
That's where it's coming from. So ndingokumbira kuti aiwa imbomira kunditexa imaya handisanda receive. Ichiri munzira. Every days. Ichiri munzira. So these things, team, let's accept those in the lobby. That's the relief. So my reliefs, my abatandis. Then let me take you to principal private residence, team. When it comes to the principal private residence, the first thing, understand kuti chi chinombonzi dwelling. So, because Panama circumstance, if it's not a person so or main residence during the period it was owned, it has been the person so main for at least 4 years, and it is sold for such other period. It has been the person so main residence, despite him being prevented from residing in it due to employment. Manzui Rema circumstance are not proof out this is a principal private residence. There are factors which prove that if it's any land, please, this part is my definitions are my component are they are critical. Then again, if we now dispose a principal private residence, but I want to use the money I've received to construct a similar, not only a similar, but in Zimbabwe, ndinokwanisa kupiwa futi a relief. Hello. So upon making an election, the sale or residential by and replaced by another PPR or a residential stand becomes exempt from capital gains tax. So when does it become exempt? So do not unzwisise pano claim a relief. So it should be in Zimbabwe. Let me do a simple example. Here, Mr. X sold his primary home for 120. Tim, I don't want us to mix principle. Remember, we're dealing with the recoupment. We're dealing with capital allowances when we're dealing with a company. But when it comes to an individual, think about your section 16. Can someone quickly open section 16? FNAG, if it's still closed, section 16 of the income tax. The one which deals with prohibited deduction. I want from the first para and second para. There's something critical there. So, mukone here team kwandiri kulinga zvinhu izvi. Ndikubva nacho ku there is another document I'm going to deal with lastly, team. It is going to be just a summary of the expectations of the examiner. Not for APC. Yeah, this one. FNH or anyone who can quickly open section 16. I want to show you something.
Section 16
of the income tax from the first paragraph.
Okay, save as is otherwise expressly provided in this act, no deduction shall be made in respect of any of the following matters. The cost incurred by any taxpayer in the maintenance of himself, his family, or establishment.
No deductions, meaning to say, even if you buy a non-current asset, a capital asset, as long as you're an individual, you cannot claim. Happy days. You cannot claim that. Why? Because section 16 iri kuzviramba. So if you go to our question, it's his primary home. So there are no capital allowances. There is no recoupment which can arise from a personal asset. Is it making sense? So it only attracts a CGT for 120, isn't it? She bought his house on 1 June for 65, please. So which means here we don't claim. There are no capital allowances. There is no recoupment. Mr. X paid 10.5 sales commission and 1.5 legal fees in connection with the sale. A month before selling, she incurred 5,000 on painting. Please, there is a difference between painting and repainting. If it's painting, is it an improvement? Is it a repair? Please. And repaired some items at the house at a cost of 2.5. Team, this 5,000, is it an improvement or it's a repair? Then the 2.5. Someone just to try? Someone to try? Is there a difference between those two amounts? Yes, Bex?
Yes, there's a difference because the other one is the first one is an improvement because it's the
an
painting,
improvement.
and then
Then
the second one is a repair, is not an improvement.
It's not an improvement, but then we are dealing with an individual. So if we are dealing with an individual, FNH section 16 RTG, if I'm dealing with an individual, know what?
The cost incurred, there's no deduction shall be made in respect of cost incurred by any taxpayer in the maintenance of himself, his family,
so
or
repair
establishment.
it's not allowable as a deduction. Hello? Team, ati muone tumwe tunhu twekuti waunozoisa muexam inotoshaya kuti munhu anga achida kuti chii ndizvoka. So if you take here how they came up with the solution, we start with the 120. So there is no recoupment, there is no exemption. We less cost, which is your whole 65,000. You don't claim capital allowances because section 16 of the income tax prohibits, isn't it? Then there is the 5,000, which is improvement, as Beck said, isn't it? But the 2.5 is not included because section 16 is read by FNH. No deduction is allowable when you are maintaining yourself. Is it making sense, Tim? Are you following? Feel free to ask because you are maintaining yourself. So you cannot claim a deduction for maintaining yourself. So that one, we pass. And is it? So can you see the 2.5? That's why it's not included. And the 5,000 included because it's an improvement, isn't it? Then inflation, again. Remember, how do you count? It's your 14, 15, 16, 17, 18. We include the year of disposal for inflation allowance, and we don't apportion, isn't it? Sometimes it's good. Yankozotengeswa musi wa 2 January. Saka panga pasati pane mwedzi. Inflation is for each year. Then selling cost, we include the selling cost. Then you get your capital gain. So Zimra, they want to tax you 20% of the whole 29,750. But I used how much did I receive? Of the 120 I received, I used the other 95 to reconstruct. So wakungoti Zimra 95 yandashandisa to construct another of the 120. Imbomirai kunditexa because andina kuenjoy for my own benefit. That's a relief. So then you tax it at 20%. Achine chichemo ne relief. Relief yabati kandi. The relief. Happy days. Questions, Tim? Or I can proceed. I want to go to another question. There's another part. If there is any hand, can you unmute? I don't see any hand. There is another thing I want to deal with, Tim. Let me just give you a context of this one. We have this context on 1 November 2017. Colonat sold a Mercedes-Benz, which he had been using for both private and business purposes when its carrying amount was and the market value was this. The vehicle had cost chakat. This is personal things, Tim, as in income tax issue. Then chinzwayo zvaitika. Then company, munhu Colonat works for a company known as CCT. On 5th of December, CCT offered 3 options. Please, these questions are favorite for examiners. Why they are favorite for examiners? Most students are not able to distinguish between there is tax planning, there is tax avoidance, there is tax evasion. So please, this type of questions, they trigger what we call tax planning. Inogona kuya iri loan, lease, etc. Should we purchase through a loan? Should we issue shares? Should we do chakat? Vari kutesta chinhu chinonzi tax planning team. Is it making sense? So they are testing between tax planning, then there is tax evasion, team, and tax avoidance. These 3 things, team, you need to understand the difference between the 3 things in detail. So mostly in any exam, team, if you fail to distinguish, the tax planning, it's arranging affairs, your tax affairs, in a lawful and commercially sensible way to obtain tax benefits which are intended by the law. So it's legal, it's acceptable, if properly disclosed and supported, isn't it? Then, the tax avoidance, please, it's using legal form or loopholes to reduce tax, but in a way that may be artificial, aggressive, or contrary to the spirit of the law. So it may be technically legal, but the ZIMRA may challenge it using the anti-avoidance rules, isn't it? That's why, Mutona, we talk about your transfer pricing, your section 98A, 98B. Is ZIMRA not challenge your tax avoidance? Then there is a tax evasion. So tax evasion, team, this is a deliberate hiding of income, falsifying records, inflating expenses, or making false declarations to pay less tax. So this is illegal and may result in penalties. And team, always, there are instances, Yekuti ethics are right triggered directly. I hope we all went through my video ethics on YouTube. Pane watu vaionere, you can show through reactions, ndone vakasangana nayo. Pane yandakabuditsa a detailed recording ethics, please, on YouTube. So if you just type Chris Munoda Wafa on YouTube, you can see those videos. Panama videos, I think I also put a IFRS 3 disclosure. Gross income, please. That's why this is about gross income and general deduction formula in detail. It's also covered there. I covered it in detail. It's on YouTube. Your gross income, your ethics in detail. If you simply say Chris Mnodofa ethics on YouTube, please make sure you go through that one. So Trukuti team, it can trigger an ethical tax evasion. It's an ethical issue. Can actually CAZ takutomurova CPC. So, but tax planning now. So my examiners, one of their favorite questions, it's question a tax planning issue. So on the 5th of December, CCT offered 3 options to replace colon at Mercedes-Benz issue at year end. They were yet to conclude the matter. So to talk about these options, please. So when they are triggered by the examiner, test and check unoziva here tax admin. Within the tax admin, we have got what we call tax planning. So for tax planning, what is the most efficient way I can minimize my tax legally? So I'm planning my tax affairs. So for 3 options, number 1, Trikunzisu CCT was to buy a Mercedes-Benz for 20 and registered under CCT. So it's the company Atenga, they registered under CCT for Colonat to use for 3 years. But at the end of 3 years, Colonat will have the right of first refusal of buying the vehicle at 1/3 of its valuation as at that date. patrigwa zvinhu zvakawanda pateam. Okay? So in an exam, vanogona kuvhunza in the context ya CCT, then they can ask it from the perspective ya colonat wacho. So tikuti isusu vanokuti what is the most tax efficient way? So not musazovharwa tuma favorite twema examiner tuma questions. Then option 2, CCT would buy the vehicle for 20 and immediately register the vehicle in colonat's name. CCT will record a receivable of 20, which will be paid off by colonat, saving CCT for 36 months. For each month that colonat saves, 55 is written off on the receivable. That's option 2. Third option, under the third option, CCT will buy the vehicle for 20 and register the vehicle in colonat's name and record the receivable. The receivable shall attract interest at 4% per annum for 3 years non-compounding. Colonat shall then repay CCT 622 per month in arrears from the first month for 36 months. To finance this, CCT offered to raise colonat salary by the same amount. Team IAC, in this type of questions, you need to identify all transactions. Please, it's not optional. Identify all the transactions. So when I'm saying identify all transactions, you need to make sure that everything, please. Why? Muchaona tumwe tuma marks vanenge vakuisa tuma half marks. So the required panel vanotokuti iwewe advise colonat na CCT. So they can they might need you to advise both on the most income tax efficient option. Hello, manzo question yangu. Advise both colonat and CCT on the most income tax efficient option in respect of the motor vehicle transaction, looking at each individual taxpayer. Someone to try? Someone to try? What's the expectation of the examiner? So the most tax efficient way to kuda minimize the tax or tipa ma highest deductions. Hello, manziza perspective. To colonat, to kuda minimize income yacha n or increase my deduction. But to CCT, the company, toda tipa maximize my deductions to the company. Hello, yepi? So what maximizes deductions? On the other, what minimizes income? Kuna colonat. Maone ere perspective ya wavunza. Wanavunza chino one. Vangokuti the most tax efficient. So they are simply triggering kuti wakabonzwa chinonzi tax planning here. And it. So the examiner is not asking for theory only. You must compare the 3 motor vehicle transactions options numerically, then advise colonat separately, CCT separately, because what is tax efficient for one taxpayer may not be tax efficient for the other. Hello? Is it making sense? So, let's start. A good example here. Let's start with option 1. So, ndakuyitanga from, and they said the tax efficient, meaning to say, kana paine ma VAT implications, and that advice on the tax efficient. So if there are VAT implications, you should include them. If there are CGT implications, you include them, unless the question is specifically stated the income tax implications. Hello? So, team network number, so you can show me through reactions when I'll be asking for a loss. That is just basic reactions, isn't it? So the most tax efficient. What? So understand this is tax planning. They are triggering tax planning. So if they trigger tax planning team, what's key? So let's start with the first option. So the first option team, to go on the 50, CC offered 3 options. Colonat. So Chekutanga, CC wants to buy the Mercedes. Let's start from CCT perspective. They buy the Mercedes. They registered under CCT. So it's a company. Do you agree with me? So the first thing you need to highlight to the examiner, the 20,000 is not an allowance. Deduction. You can get.
Hello, Chris, we can't hear you.
Confirm you can hear me. Confirm you can hear me now. Thank you. So the first thing from CCT's perspective, team, all right, in the thought process, young, depending with the number of marks, which means there are, first of all, there is the purchase. So I'm picking it from your has got an enduring benefit. The motor vehicle has got enduring benefit. It's going to be used over 3 years. Therefore, it's capital in nature. It's not, the 20,000 is not allowable as a deduction. Prove it to the examiner if necessary. Then I go to the other side. However, section 15(2)(c), isn't it, allows, I say Nele. I saw a hand.
I lost you when you started explaining. I think your network was breaking. Can you just repeat?
Right. Let me start, isn't it? So the first thing I was bringing out here is that we bought a motor vehicle, isn't it? The company bring out the aspect that expenditure, why the 20,000 can it be claimed as a deduction? So in Pandu section 15(2)(a), expenditure incurred which is not which is of a capital nature is not allowable as a deduction. Senel. That's where I started, isn't it? Then no proof the motor vehicle has got an enduring benefit. George Forest case is going to be used over 3 years. Therefore, it's not allowable as a deduction. Why I'm not listen. Then I go to the, however, it allows me to claim a deduction. So isn't it? Capital allowances. So motor vehicle, I can claim, but I've got a deduction, 25% of the 20,000. That's the first thing I'm bringing out from the perspective of, not from the perspective of. So I will claim deduction, DCCT. Then ndapedza ipapo so kuna uyo they can CCT, they can only claim capital allowances. So what's benefit yandiri kuwana from this as CCT, we are claiming capital allowances, ndizvo. Then another, this is a passenger motor vehicle, Senel. So which means it's limited to 10,000. Timu zvinhu zvandiri kubudisa mukuzvionawo here izvi. Toda kuti musazoona paya pamunoisirwa kuti mahalf mark oti muone zvinhu zvamunenge masiya. So this is a passenger motor vehicle. Proof this is a passenger motor vehicle. It's a capital passenger motor vehicle. It's going to be limited to 10,000. So I'm going to claim 25% of the 10,000, not the whole 20,000. Maone read the flow and build that team. If you have questions, feel free to ask. And That's the logic. Examine, which means I can only claim on the 10,000. Please don't miss those things. If you miss team, a good example, the past IAC exam. 9 months vavakupa annual salary yake, so kungotadza kuti times 9 over 12 hapana half mark apo team, you won't get a mark. Kune chinhu chekuti ndo principle yacho kuti uone kuti this was for 9 months. This is a passenger motor vehicle, so a passenger motor vehicle it's limited in a deemed cost, which it's limited to 10,000. So please, ukatongono calculator based on 20,000 zero, hapana half mark up. Apa kusatoziva the principle, takutokuroka nese of interest rate to professional competence and juke. All right, so hapana negotiation. Then that time as with him, ngatipfurirei ndichiri from the company. Then at the end of 3 years, Colonat we have the right of first refusal of buying the vehicle at 1/3 of its valuation at that date. It's after how many years? 3. So if it's after 3 years, team, dakuda kuno consider hapana recoupment here from CCT perspective. Dakuno calculate a recoupment. So pane I claim as a deduction. Don't you know the recoupment on the same amount? So to the recoupment is an income minus the deduction, don't have the net, don't net benefit yachawana from this. Padiri. Then I go to the other side, team. Koguna CCT. CCT team, Colonat, is going to use the vehicle. Katitange ipapo team. Is going to use the vehicle. But before that proceed, team, you know, it can be a scraping allowance. You know that? So, you know, the recoupment, you know, if we sell the asset at a price above, my capital allowance is attacker claim. Then, you know, the scraping allowance, it's like your loss on disposal, but from a taxman's perspective. We sold the asset at a price lower than the ITV. Then, but scraping allowance, that loss can only be claimed if it was in a false disal, like motor accident. If it was a free will disposal, like in our circumstance, could we agreed we are going to sell it to Colonat, we can't claim a scraping allowance. Happy days? You can't claim a scraping allowance. So his scraping is only for someone if it was involved in an accident, then you were compensated by the insurance. Then let's take the same from from Colonat's perspective. So Colonat is going to use the car for 3 years. So let's first start using the car. It triggers motoring benefit. Is it making sense, Tim? So you need to understand this vehicle in terms of section 81F. Colonat is receiving a benefit through the right of use of a motor vehicle. So this will be included in his gross income, which we calculate using the engine capacity of the vehicle. So Colonat will include, so we end up with your section 81F, totals are the CCs of this car. Say income. That's why that kuno mkona kuna CCT, deduction. I don't consider deduction, but as well disposed. But Colonat now, it becomes an income. Then later, at the end, Colonat is going to purchase the vehicle. And if you purchase the vehicle, to not target the difference between the market price and the purchase price of that vehicle, the difference between the two, it's income. But Ingori exempt if someone was over 55 years. Hello? Are you following? If someone was above 55, then you're exempt. So So to the other side, it's income. So we need the most tax efficient. So from colonist perspective, we need what minimizes my income. So that if the higher the income, the higher the tax. But to CCT, the greatest deduction, which reduces my taxable income. Can you see the perspective here? So then, because the vehicle was going to be disposed, then in terms of VAT, this is the disposal of a second-hand vehicle by a non-car dealer. There are no tax output tax consequences here. And also because the person denied VAT at acquisition. Happy days. So I've taken it from two perspectives because examine at the most tax efficient. They didn't say the income tax. That's how I asked the question. This is advice. So per advice team, each aspect. What could discussion? What could the calculation? Let's go to the second option. Option 2. Option 2, Truguti, CCT will buy the vehicle for 20,000 and immediately register the vehicle in colonat's name. So company they are thing, but more register in the company young. So in the name, ye individual team, holding other things constant. It's ndikango gumira up. Vakasandudza kuti fedha kuti achabhadhara sei. That's a loan. Mukubabate here team. Hakuna ku business patinobhadharira munhu something for free. There are no free buys in business. I think there's also an interesting recording on my YouTube channel team for IFRS 15, a practical question. IFRS 15, it's detailed. Please go through that one on IFRS 15 on YouTube. So simply Chris Mnodova. So would buy the vehicle and immediately register in colonat's name. The moment it's registered in colonat's name, CCT cannot claim capital allowances. Hello? We cannot claim capital allowances. It's no longer our vehicle. Then how is he going to repay? CCT will record a receivable of 20,000, which will be paid off by colonat, saving CCT. So if I'm going to save, I'm an employee, it becomes remuneration. For each month that colonat saves, 55 is written off on the receivable. So let's discuss it. So option 2, the receipt of this vehicle is included in the gross income as remuneration. Your section 81F and 81B is read with your 13th schedule. This constitutes remuneration. So this vehicle, the receipt of the vehicle is gross income. And the amount to include in gross income, we consider the cost to the employer. It's your cost to the employer. So the benefit here is for the service to be rendered. Hence, it is remuneration and revenue in nature to colonat. Does it make sense? Then, since it's a fringe benefit, it's a deemed supply for VAT purposes. But since it's a second-hand motor vehicle, by a non-car dealer again, no output VAT arise again. Then again, input tax is denied on passenger motor vehicle acquisition. So in terms of VAT, nothing. But if you go to CCT now, I'm not discussing this as a vehicle. It's not our vehicle. So I go to section 15.2a. It allows for expenditure actually incurred for trade purposes, which is not capital in nature as a deduction. Please, the principle. So the acquisition on behalf of colonat is a payroll expense. It's a remuneration and is deductible. Hello. Did it make sense, Tim? So you can deduct the whole 20,000. Hi, Garga.
I Chris.
Yes.
So you said that 20,000 is remuneration to the employee. What
Yes.
about this? What about this deduction of 55? Or what about this write-off of 5,555? Is he also not supposed to be given a deduction of this one, since we have taken 20,000 to be a remuneration?
No. To whom? To colonat.
Yeah.
You can't. It's not allowable as a deduction because it's being deducted. Ndikashanda 555 is written off. And this kubhadhara, it's just being written off. Kunzi pawashanda yadeducta, pawashanda yadeducta. Gari.
Okay, fine, Chris. Thanks.
It's the principle. All right. So, these type of questions, again, they are favorite for examiners. So that's why I decided to take this question. Don't understand lease, etc. Please understand your tax principles if you get questions of such nature. Then let's go to the third option. The third option is saying, under the third option, CC will buy the vehicle for 20 and register the vehicle immediately in colonat's name and record the receivable of 20. This receivable shall attract interest at 4% per annum. And now these days, takushandisa inonzi SO, we call it what? SO, we replace the libel, what, and it, you know that, and it. Takuti, yeah, we don't go teaser, man. SFPR, ndizvo. All right. So, tighter is team. Colonat will then repay this up Badara now, Gary. To finance this CCT offered to raise Colonat's salary by the same amount. Please, let's not mix. Uyachanga achibhadhara iyi. But to finance this up your 662 amount yake salary yawe zero. So let's start it from CCT's perspective. From Colonat's perspective. The loan receipt in the form of a motor vehicle, please, is of a capital nature for Colonat and will not be included in gross income. Why? Tim, I explained to you the principle of received by. If I receive something with an obligation to pay back, it's not for my own use and own benefit. So this becomes a loan and I have an obligation to pay. So I did not receive. So it should not be included in gross income. Maybe? So it's not income, but still in the same context, there is a salary increment of 662-ish. So that you'll be able to increase. That's a salary increment. It's a remuneration. In the hands of what? Of colonat. It's income, which is taxed. But he is paying according to the old context, Tim. There is what it's your 4% plus libel rate, isn't it? Which was usually 1%. So I'm paying, it was 5%, the libel rate of 5% plus 1%. That kind of thing. It's supposed to go, but there are 4%, which is less than it usually 6%. So that is what is the difference between your 6% minus 4%, panic at 2% up of the 20,000. That one, it was considered an income. It was deemed an income. And do you still remember that concept? But it's now replaced by SFPR. Isn't security what offer? SOFPR. SOS. Security overnight what finance. Karutis of mind. But that's the principle. Maybe? Then let's take this same thing from the perspective ya CCT. So Tim, show calculate my amounts akuti chazoda kuti ndepapi paane the least income, paanowana the more income. Ndizvoka nepaanowana uyuma greater deductions. So in terms of section 15.2a allows for expenditure incurred for trade purposes, but that is not a capital in nature. So in this circumstance, the loan to colonat is of a capital nature. isn't it? This is capital in nature, therefore it's not deductible. But the salary increment is a staff cost to CCT, so it's an allowable deduction. But because I've learned someone, there is a finance income from Colonat, is gross income in the hands of CCT. Then what wapedza wangochitoita nema calculations, you're building your thought process and the calculations, you should now give the conclusion which one is the most tax efficient way. Every day. All right, let me now open the last document for the day. The one I prepared. So team, this is mainly for those who are writing IAC. So what's the expectation, isn't it? So please, you now in the CA of the future. So if you are in the CA of the future, confirm you can see my screen, team. Get this. Passing CT or IAC is not achieved by knowing standards only. Can you see that? It is achieved by converting knowledge into a scenario-specific, well-structured, professionally communicated answer that demonstrates technical competence, enabling competencies, and professional values and attitude. Please. Understand these facts. I just want to show you a few things. So what's key? So based on this, why capable students still fail? So the most repeated examiner criticism is not that students know nothing. It is that students know something, but fail to apply it to the facts, fail to explain why it matters, fail to use the required wording, fail to show workings, or answer a different question from the one asked. Kana tiri kubvumirana team, you can show me through reactions. You see those things. So I need you to appreciate. So knowledge without application becomes a theory dump. Confirm on the way I was structuring my solutions, team. Mamchiona reaching Chinon's application. Those who especially who followed this session from the beginning up to now. So knowledge without application becomes a theory dump. So Micah comments and Anchiona, they repeatedly identify shopping list answers where students recite theory with no link to the scenario. Calculations without workings become unmarkable, please. So you may have calculated something, but if the working is not visible and cross-reference, marks are lost. I'm just touching this. And then audit answers often fail because students write generic either instead of procedure with a clear verb, source, assertion, purpose, and scenario-specific detail. Then on ethics, answers often fail because threats and principles are identified generically. So this one team did a detailed ethics recording, which is on YouTube. If you simply say Chris Mnodoffer on YouTube, see there is IFRS 15, there is IFRS 3 and IFRS 5. There is also other general for IAC, and there is the gross income and the general deduction. All right. Then, what competence framework expects in an exam answer? Please, what's expected? So we have this year of the future. That's why some are saying students are failing because of this. The competence has got three most important things: your professional values, your attitude, and enabling competence, isn't it? Then, and technical competence in the value creation process. So there are three things I need you to understand. What does professional values and attitudes entail? It's ethics, citizenship, lifelong learning, professional behavior. So student evidence identifies ethical issues. Who are the affected stakeholders? Which principle is breached? Which consequence, safeguard, accountable recommendation, and the use of a professional tone. Then when it comes to enabling competence or acumen, your business acumen, your decision-making acumen, so analyze internal and external facts, use this data. So for example, one of the questions, like the one and up is the other one question offer on my examiner, it's about sources of capital. So if they ask you, which source of capital, toshansa right issue, trade loan, etc. Which one preference shares? I should first consider all facts, internal and external. I should also consider both the quantitative and the qualitative aspect. Please, let's look for both sides. So analysis, internal facts, use data, challenge assumptions, explain alternatives, and conclude clearly. Then for technical, you are applying the correct standard, act or the model to the facts, and give a specific calculation, B adjustment, risk, procedure, etc. Isn't it? So answer is not longer for the sake of being long. Please, it's not about long answers, isn't it? It is deeper, clear issue identification, correct technical base, scenario application, evaluation of alternatives. So Mukatarsa, the reason why I started with the practical side, confirm manga muchizviona in the way I was developing my solution points. Hello? If we are in agreement, you can show me through reaction. Confirm manga muchizvipika as I was building my. So this is what expected, team, of a student, a complete solution point. So mostly I always argue, students do not fail because our knowledge my past paper account. No, it's about the knowledge gap. So most students running in a knowledge gap. So marker shortfall. So application of knowledge, theory copied without connected to facts. Correct standard mentioned, but no scenario consequence. Can you see application of knowledge, team? How it appears, and it. So please use a rule plus fact plus effect plus conclusion. Every paragraph must contain at least one scenario fact as you are answering. Then when it comes to your workings and computation, your final answer shown with missing supporting calculations or no cross-reference to workings. So you should show the formula, substitute the numbers, label your workings, cross-reference with another W1, W2 to the final answer. Then communication, long and structured paragraphs, unexplained abbreviations like COB, team. Paper rako rikumakwa nemaboy South Africa, hakuna COB. Tango anyora companies and other businesses, entities, also in brackets, therefore COB. Please, don't put ngoti COB. That's the last, but so use headings from the required short paragraphs, professional language, and conclusion after every major section. A good example, when I was discussing whether the 20,000 is allowable as a deduction. Did you see my thought process, team? The first one on option 1. The Tanga Nekuti section 15.2a. This allows expenditure incurred which is not of a capital nature. Then approve out the purchase of the motor vehicle. It will be used for 3 years. It has got an enduring benefit. Therefore, it's capital in nature. The moment I conclude it's capital in nature, therefore, it's not allowable as a deduction in terms of section 15.2a. Then, however, section 15.2c allows to claim for capital allowance for motor vehicle which are going to be used for benefit of the business. This way, hello, can you see clearly the thought process? Even if I take you back to the CGT, which I was dealing with, that's not proof. finished warehouse? Is it constructed? Is it purchased? Is it an industry? Is it a commercial? That's the thought process. So these things, let me take you through again. Then generic audit procedure. As a wedding copied, no source, no purpose, no assertion, no amount or date of person. Another issue in the January IAC, it was the issue when Maganonyora markets sema general substantive procedures. It triggered cats, but when we answer markets, kungaruku answer a general procedure. So those still facing challenges in cats, there is a video on YouTube again on substantive procedures using cats and TOC using cats, isn't it? All right. Then another key thing, risk at wrong level. Discussing financial statement risk when assertion level risk is required. So please, how do I know the moment if it's risk at overall? Therefore, revenue will be understated or overstated. Or for it. Is it at overall? If it's at overall, it affects more than 3 line items. So it should not be linked to a specific standard. Happy? Then ethics too generic. List threats, principle without parties, pressure, consequences, or safeguard. Use who is affected, what principle, what threat, why serious, what action. Weak data or external environment. Fails to use statistics, market data, exchange rate, inflation, competition, sustainability. So you need to build a mean pestel, either 6 capital when required. Ask for strategy, risk, business model, or decision making. Then I took it further here, team. Answer building methods. So find the required. What exactly is being asked? Discuss, calculate, advise, evaluate, procedures, controls, risk. So your practical output, please, a mean plan using the required wording as the headings. Analyze which dates, like Nambokupa yekuti vanhu January pane gross income ye 9 months munhu arungonobairira ye 12 years. Think about if it's consolidation. Tikaya iri consolidation, usually vanoda, we need 3 important dates. Acquisition date, since acquisition to beginning of the current year, then we have the current year. Are you able to clearly distinguish which dates, amounts, which amounts, parties, which standards? Are there any legal issues, business risk, and red flags? And red flags are triggers. So trigger list, please, in margin or rough work, please. Connect to competence. Is this technical, enabling, PVAs, or integrated? So answer covers technical rule, judgment, ethic, business, and communication. Tied to the framework, which value creation area is being tested. Then structure, which layout will earn marks fastest. Tables, headings, workings, short conclusions, clear recommendations. Then these are, then here I was dealing with the different verbs. If it's a discuss, if it's a calculate, if it's an advise, if it's an evaluate, if it's a describe, if it's a substantive. So this one I'm going to share to this one is to everyone, please. I don't know data say kuti ndikwanise kuzoshare to everyone. Inbox yangu ingasafi, but it will be this one only. Not other one. It's my intellectual property, but this one still I'm going to share it in I read only. Then for financial reporting team or reporting on value creation, start every issue with recognition, measurement, presentation, and disclosure. Please, if yega in a classification, in a recognition, in an initial measurement, in a subsequent. What I'm simply saying, think about, is it an IFRS 16? Don't understand that, okay, the class, when can we say there is a lease, my para 9, as read with B9? Then what's my lease term, my para 18? Do I appreciate it? When do I initially measure a lease, which is my para 26, my para 24? Para 26, lease liability. Para 24, that's the right of use asset. But I only start from para 26. That's why? Because for me to determine the right of use asset, I start with the initial measurement of the lease liability. Then para 26 define how do you calculate the lease liability, the present value of lease payment. Then para 27, it deals with what constitutes a lease payment. That is structure. That's what I'm saying. Do you understand that? Then subsequent measurement, do you understand para 29 becomes subsequent measurement of right of use assets, your depreciation. IAS 30, if it's para 36 deals with subsequent measurement of the lease liability. Then para 39 to para 43, it deals with the reassessment of the lease. Do you appreciate and understand that? Is it an IFRS 9 issue or IAS 32? My para IAS 32 para 11 deals with the classification. Is it a liability? Is it an equity? Is it an asset? Then how do I distinguish between a liability and an equity? It brings my para 15 of my IAS 32, substance of the contract. Then it takes me again to para 16 where they define equity. Then para 17 to para 21, it talks about what you call the cash avoidance test or the fixed for fixed principle. If I want to distinguish between, it's still the classification. I completed the classification. I go to IFRS 9. Chapter 3 deals with the initial recognition. Then I go to chapter 5. It gives me the initial measurement. Chapter 4, it gives me the subsequent measurement. But they start by saying the classification for subsequent measurement. That's how you should interpret an IFRS standard. Hello? Is it making sense? Are you following? But all these things, you need to have a better understanding. Every standard should be interpreted in a certain way. So here I was dealing with module by module. So what I can simply do, team, I don't know. Let me quickly create sort of like I think a mini group so that I share the link in the so that I will share this for you. I think so, isn't it? If I can create a quick group, then I share the link so that I will share this one. Let me just add in 1 or 2 people. Let me say, call it, say, Chris. I want to copy the link, invite via a link code, isn't it? Oh, all right. So I'm sharing the link so that you join, so that I'll share you a read only of this. Let me share the link in the chat so that I think time Zaenda, I usually finish at 10. So let me share this. So let's join the group using take the link. I've shared the link in the chat so that I will share this document, but it will be a read only. This one I'm using, the one I'm using here. So let's join that group. Matozara kudaro. So I'm going to share that one. So all right, fine. I'm going to share. What else here? So then there is audit, there is taxation, there is management. Then in that group team, I shall share a few to Magunans here and there, which will be benefit you. Then if I decide to have another free session like this, I will communicate in that group. So let's join that group. So it will be so team questions. Before anyone vanima banning questions, I can respond. Any question, any, and I'm not limiting to what we covered only. Anyone with a banning issue? Yes, Prudence.
Thank you. So I want to ask on acquisition of a subsidiary. So if we do like a fair value adjustment on a building that is like owner occupied, but on the date of acquisition, the carrying amount was the fair value was higher than the carrying amount, and we had to do a fair value adjustment. How then do we go about the tax issue? Do we use the 20% capital gains tax rate, or we use the normal tax?
All right. So already watongo wazvipindura ndizvoka. When I'm dealing with what do you call it? A building. What land? Ndizvo? Is it land?
No, it's a building.
It's a building. So the building, the first thing I need to understand per building, Edu, is it being fairly valued? Ndizvoka. But usually I'm not use the cost model. Ndizvoka. So for building, and it tauda kuona kana rine jomen of recovery sana investment affect both the CGT and the income tax. So no patinoti value cost anything above the cost price chino attract a CGT. It's a deemed disposal. Anything below the cost chako attract your capital allowances. It attracts your income tax. Prudence.
All right. So we are using the building. It's owner occupied. Right. It's not an investment.
Attract income tax.
Also, we use the normal tax rate.
Yes, your normal tax rate.
Income. All right. Thank you.
Yes. So team, I think mostly apana sata kwanza ujoina group. Apana ndiri. If I end this session, the lecture is being recorded, Kudzai. The lecture is recorded. Then Aline is saying, may you share that question and solution we just did. Which question? The one for Lindsay, the one I was discussing Yema options. If you hear me, or Lindsay, it's fine. I'm going to share it in the group. Rama join, Kanama join a group. That group is fine. Another question? In other question, then team confirm tiri kwanisa taone here YouTube channel yandakudzai. Let's quickly search now. Chris munoda wafa before we close this session. Usazoti ndaishaya. Chris munoda wafa. Then over press subscribe. Then pane video ifris 15 please practical. Ndikuona watoti subscribe. Chris munoda wafa, please subscribe please. Then pane ifris andikuda kuti munyaso ona pane ifris 15 pane substantive using cats. Pano tatu subscribe. Wow. Then pane ethics. Pane gross income in the general deduction formula. Then this one ndichango remove your names etc. Ndinongozosiya ichiburitsa screen. I'm going to put it on YouTube first thing tomorrow, but andita pai mazita enya abude. No names inenge chingoburitsa screen the screen I was sharing and it only. So I make sure it's only the screen, do a cropper only for the screen. All right. So team, all the best in exams. Let's follow the group. Vasati vajoina the group. Nchange nchikutumirai tuma things twe kuti mungo for your here and there to be necessary. I'll share so that you have a better understanding etc. But it's not much. The main zvinenge zviri ndine the main students group rangu. Unfortunately vamwe vanga vasingazvizive, but it's fine. Ndine the main group rangu remastudents angu ndokwandinonyanyozisa the material. But this one I'm going to put it on YouTube so that you can go through again. Then in that group you have joined for APC support, vachange vapasa vachazoda APC support, please get in touch with us in that group. Will kindly assist, especially vadoita crash program. You have the hours, you pass your IAC up, you want to write APC in December, I'll be there for you. All right, then for CTA, you always get in touch, please. That's my contact. You can say Chris in the group. Good night.